Hey everybody, this is Jim at SP500chart.com coming to you from Las Vegas, Nevada. It's about 7:40 on the East Coast, but there goes my pop-ups on my dadgum laptop. It's going to happen more and more, and I absolutely hate this computer because I don't use it that often. I just use it when I'm on the road. So I'm constantly getting these stupid little pop-ups that seem to always time themselves after I've been on for about 20 or 30 minutes. Whatever. Look, before we take a look at the chart, I need to remind you that this video and the website are for educational purposes only, and nothing stated in the video or at the website is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional, just a guy that draws lines on charts. So look, I'm going to make this kind of short and sweet. Interesting day. We have not yet reached one of our expected levels of support, which would be the first one, I think, would be this green line. And then the second one would be this extended line right here that is at about 1654. So what if we don't reach those? Well, if we don't, then obviously the market's got something else in mind. But usually you would expect to go back and retest some of these lines. And either one of those is a good candidate for a retest. However, if this market just wants to plow on up, we've got a little resistance line up here at about 1698. We might be, and I'm guessing now because it's not there yet, but maybe we're forming a consolidation pattern that's going to take us sideways for a few days, then potentially break out over 1698 and head up into the 1700s. That's kind of what I'm thinking is going to happen. And I'll tell you, there's more reasons than just looking at this chart. Looking at some of the fairly large cap bellwether stocks, if you will, a lot of them just don't look ready to turn over at all. Instead, they look like they're kind of pulling back after some fairly decent moves, indicating maybe they're ready to move up. So I won't bore you with the details on that because I think we got enough on our plate keeping up with the S&P. The trading today kept itself so far in the form of an ascending wedge, which carries with it bearish implications. And that would, if it follows through as a bearish wedge, then you could also call it a bear flag, then we would be looking for a break of this line right here. And I think if that happens, that will probably be a setup for a rundown to test one of our support lines. It's not easy because we broke this channel, and I was talking about how that might be a good opportunity if you're skittish to maybe lighten up on your long positions, with the idea that we would get some kind of a little pullback and then resume on up. But with the way the market behaved today, I'm just I'm planning on standing pat with what I've got. It's going to take more at this point to make me sell, and I'll tell you what might do it. If we come down and we end up taking out this green line, then that would likely set up a move down to about 1654. That's still not very far beneath us. Another thing that could be happening, and this is another thing that we can watch for, let me go back to a 30-minute chart. If we ignore this line just for a bit, I think we might want to keep our eyes on the potential for the last 1, 2, 3, 4, 5, 9, 10, 11 days, maybe setting up a little reversal pattern up here. But still, I think the final result is going to be more upward momentum. And by the way, one thing I failed to point out in the last video, I want to do that right now. This is a chart we don't very often look at. This is a 9-day chart. Each candle is 9 days. But what I want to show you is this red line right here is our all-time, well, that's no longer our all-time. It is the line that was drawn over the 2000 and 2007 tops. And we are now roughly 5.5% over that line. That would be another area where someone might expect, upon a serious pullback, to find a solid bounce. So just wanted to show that to you. If we zoom the chart out, there you can see the line right there. There it is over the 2000 high, drawn across the 2007 high right here. And we are well over that. So let's zoom back in for just a second. So let's add one more trend line to this chart, just as something to keep us on our toes. Let's add that right there. And we're going to make it purple because there's an outside possibility that we could be looking at the formation of a little top up here. And the top would have formed right before the breaking of this channel. Maybe we get a little pullback. And if we fail to get over that 1700, 1698 line, and we start coming back down, then that would make this little pattern here a head and shoulder, a small, but still a head and shoulders top. And that head and shoulders top looks to be about the right size to bring us down to the mid 1600s should it break down. But it hasn't broken down yet. And even though I mentioned that I thought I might unload some things here, I'm not quite ready to do that yet. Because I think we could also be forming an inverted head and shoulders right here with this, the neckline. Isn't that interesting? So once again, we have a potential bearish pattern where this will be the neckline of a head and shoulders top, which is, by the way, much more developed than anything else in the short-term chart at this point. Or maybe we're going to come up to this line, dip back down again, and then resume our uptrend. Either one of those is possible. So I believe I'm going to wait to see if what this pattern does, because this head and shoulders patterns have a tendency to be more predictable in a change of direction than just a channel break alone. Because we've seen before where we've broken a channel. A good example would have been fall of 2010. We broke a channel and everyone was saying that's the top, go home, everybody sell, it's going back down to 600. But in fact, we broke the channel and immediately started forming an inverted head and shoulders pattern. Now that was a big pattern, took many months to form. This would be a very tiny one, but still the idea would be the same. So guys, that's your video for July 25th, 2013. We'll have another one for you over the weekend where we take a look back on the week in general, see how things went. Look guys, thanks for watching. Thanks especially for your support.